Welcome back, everyone. I hope you're all doing fine and well today. It's another video where I'll be explaining to you my top trade setup, the one I'm holding, the trade I'm holding right now, and the one I'm looking forward to trade. And I'll make some recommendations, and that's all. We're going to jump straight into it. So before we actually kickstart, if you watch my previous video, the one I recorded on Thursday last week, you will see that I explicitly explained the economic heat map in the United States, the European economic heat map, the United Kingdom economic heat map, almost all the top 7 currency. I'm talking about the G7, the US dollar, the euro, the pounds, the Japanese yen, the Canadian dollar, the Australian dollar, the Swiss franc, and the New Zealand dollar. I talked about all of them in details. Because of the longevity of this trade, I'm not going to talk about all of that. So nothing has really changed since Thursday to now, honestly, aside the consumer sentiment that came out on Friday, which came quite shorter than expected. You can check the economic calendar for that. I'm still going to talk about the economic calendar we have for this week. But at the same time, let me quickly talk about the COT data because we have a new filing on Friday. So let's take a look at the COT net positioning first. You can see Canadian dollar and Swiss franc are still the lowest, and New Zealand, excuse me. We have CAD, Swiss, and Kiwi. It seems to be below 20%. So the net shorting is still for CAD is still around. Let me take a look at it. You can see right here the net shorting is 89%, and the net long is 10%. Meaning institutions are still leaning towards shorting Canadian dollar. The same thing goes for Swiss franc, where we have 10% for short. 10% for net long, and we have almost 90% for net short. Okay. When we look at the New Zealand right here, you can see that we have 19% for net long, and we have 80.96% for what? For net short. Okay. These are institutional positions. And now taking a look at so these are gonna be interpreted when I show you my general view on all my positions, okay? Because I'm currently shorting CAD, Swiss, and Aussie, including Kiwi, okay? And they're not with Kiwi pound, Kiwi dollar, they're all with yen, okay? CAD yen, Swiss yen, Kiwi yen, Aussie yen, I'm shorting all of them. And if you take a look at yen right here, you see that we have 80.48% net long and just 19.52% net short, okay? That's also telling you about the position of the institution that they're leaning towards buying and selling. Now, taking a look at the new filings that we released on Friday, which was last Friday, you can see right here for United States dollar, let's start from there. You can see right here we have just 184 long contract that was added, and there was a close of 1,913 short contracts, which was closed. And we still have like a net long of 71.53%. and 28.47%. This literally telling us that yes, institutions are still not backing up on dollar strength. Okay, they're still long, they're still super long on dollar, as the case may be, they're still very bullish on dollar. Take a look at euro right here. You can see that we have 3,424 long contract that was added on Friday, and in over almost 20,000. Let's just call it as it is. 19,772 short contracts were closed on Friday, leading it to 51.8% net long on euro alone. But this is still average, okay, because I'm going to still show all the data history so we know how the institution are actually positioning themselves. All right. So pounds right here, if you take a look at pounds here, you see what we have here, that the institution opened a new 12,920 long contracts. And they closed 2,300. They also added 2,301 short contracts. So they added both. But you can see that the long contract was way bigger than the short contract. And you can see the net position for pounds. So we've talked about the dollar, the euro, and the pound. Institutions are opening more. They're holding long contracts. They're holding more buy, okay, on all these 3 pairs. Now let's talk about yen. You can see yen right here. It's on an average, okay. We see that institution last week, they closed 7,165 long contract. At the same time, they closed 7,416 short contracts, averagely the same. So we still keep the net long is still at 80.48, and we have shorts, the net shorts at 19.52, which is still averagely the same, all right, when we compare it with last week. Now, coming down to Kiwi, you can see right here, Kiwi closed they closed 1,561 long contracts. At the same time, they closed 4,395 short contracts, meaning they're more like just trying to cash out on some of their profits or probably reducing their margin on their losses. Okay, but you can see that they are closing more of their short contract than they close their long contract. And if you check Swiss as well, Swiss closed more short contracts than they did the long contract. Okay, you can see what they did. What happened here? 443 long contracts were closed, while just 1,000, where over 1,000 short contracts were closed. Okay, so this is also telling you something, and I will still be holding my Swiss yen for as long as possible until I am tapped out in loss. Okay, because the structure supports what the institution seems to be doing. Okay, that doesn't mean I'm right. Okay, because this is not a set stone. Okay, that you should just go ahead and follow what the institution is doing. You still need to mix it with technical, right? So that's just for the beginners, anyways. Australian dollar, you can see right here, it's also average. Okay, 2,980 short long contract were closed, and 2,987 short contract was also closed. So the overall net position is still favoring the short position. You can see right here, over 65% of short, and we have just 34.2% of long position for Aussie. The same thing go for card, almost the same thing. We're closed, and we still have like a whooping short contract, short position, which is 89, almost 90% short overall. I mean net short, and then we have just 10.62% net long for that one. So on my trade, considering the position of the institution, which was filed on Friday, I think I'm still on track. All right, and let's start with you can see United States right here. They've been padding up a lot of long. Okay, a whole lot of long since January. Okay, since the last time they padded up their short was in December. Since January, they've been padding up their long position, net long, net long, net long. So which is very good. So if they keep this up, it looks very good. Meaning that yes, dollar is going through some tough time right now, but definitely it's still very bullish. And if you watch the video I recorded last week, you notice that the economy still looks very strong, considering the fact that the currency is going really slow right now, which is very normal considering the economic policy that Donald Trump has been, has introduced all of us to. Okay, but at the end of the day, the US economy is still very strong. Okay, so I'm gonna stay to that. Let's take a look at the yen, dollar yen. The yen is yen right here, not dollar yen, just yen only. So let's take a look at yen right here. Let's see what is going on over there. If you look at the yen right here, you can see that since February, that's when they started packing up their long position. All right, you can see that February they had a 7,000 long position. February 14, 34,000 long position, 30,000 in February 21, February 28, 24,000, March 7th, 12,000, and this is the first time they will close some of their next long contract. Okay, so this is really, really good for yen. So I'm still leaning toward bullish as far as yen is concerned. But this week, Friday, the filing will really take it. So if they start closing their long contract, then I might also start looking into somewhere else. Okay, I've really made some decent chip in and chip out kind of profits when the market pulled back. I joined another trade, I got tapped out, I closed on. It's been a little bit of roller coaster, which I don't really like. But at the end of the day, it still kind of makes sense in my personal opinion. So I would say it's still in the middle for me as far as dollar is concerned. But overall, it's been really good. All right, it's been really, really good. That's what I would say about my yen trade. So let's take a look at CHF. I think Swiss is fine. Let's take a look at Swiss because I don't want to waste much of the time. So you can see Swiss right here. Since when as the net long has been quite bearish? Since January 2024. This is crazy. Okay, this is crazy, guys. Since January 2024, it's been a colossal short. Sell. The net position has been bearish, has been negative, meaning Swiss is quite weak. But this is not something you want to like just sit on for the rest of while you are retail trading. Okay, because at the end of the day, you notice that there was some time that Swiss was ranging for a while, especially if you check dollar Swiss. You see that the time it was bullish, whereas the institution are still selling. Okay, but it was bullish, it was bearish, it was always. That's why you need to mix technical to all of this thing. And what I'm trying to tell you right now, especially when we consider what happened in September last year, so we consider that, or let me say, anything from April last year till September, you see that Swiss was literally beating dollar at the game. So let's take a look at that before we actually conclude. You see what I'm saying right here? Yeah, exactly right here. Since May, this is May. You can see Swiss seems to be beating dollar at the game. So at the end of the day, right here, institution were still busy what? They're still busy selling Swiss. Okay, we're still busy selling. So you can see all of it right here. You can see them. Okay, it's all still tallying towards the answer. That's why Yes, CO2 data is fun to understand. It's good to look at, but you don't just want to sit down and just trade because of that. You also need to mix technical to it so it will make absolute sense. All right. So, I talk about the commitment of trader precision and everything. But at the end of the day, I still look at the technical, I still make my decision based on technical analysis, not just because of fundamental. But I mix everything together. It has to correlate. Okay, all of these has to converge into one particular gigantic signal that I can follow. All right. Anything outside of that is either I'm trading something counter trend, all right, or something else entirely. But if I'm going to follow my trend strategy, the fundamentals and the technicals has to align. Yeah, there has to be a confluence. So it will help me pick that trade. And whatever outcome, whatever happening, or whatever the result is, it doesn't really matter. So, anyways, now looking at the top setup right here on Xfinder, you can see that pound dollar still remains at the top, very bullish with a score of 9. The same thing with Euro Aussie that I'm currently shorting right now. Like I said, sometimes I go against this because I'm counter trending. Okay, I'm just shorting the pullback. It's main reverse of some of you must have heard about it. Euro dollar also, I'm currently shorting Euro dollar also. Pound Aussie, I'm currently not touching it, but I'll be looking for buy opportunity in the next couple of days. Gold also, if I get a pullback, I'll probably take a buy. Euro Kiwi, I'm not touching that one. Pound Kiwi, I'm not touching it. Euro Swiss, possibly gonna look for a buy, but I'm gonna wait for a proper pullback on this one. Pound CHF, I am interested in this. Some of my friends took a trade, but I didn't take it because I'm already exposed to some of this trade. So many of the NPEs, but I'm also gonna join this buy opportunity. Possibly if I can get a pullback a bit deeper than normal. All right, something very deeper, probably back to where all of them joined. Then I can join the trade as well. And then we come back to US oil. I have a short position on US oil. CAD yen, I'm still shorting. USD CHF, I wait for the correction to be over for me to take another short on USD CHF. Also, possibly considering if dollars remain weak. Okay, this USD CHF is still very objective. Okay, I'm not going to jump into it. But if I get to see the pullback on US and DXY and I see that the rejection is there, and I will possibly join this USD short. If not, I'm just going to stay away from it. Aussie yen, I'm still within a short trade on it. USD, I'm still within a short trade on this one. So that's that on all my, considering every single thing here on top setup. So let's come straight to this particular place where we talk about the chart. So we'll talk about the technical aspect of the whole thing. You can see on my chart today, I'm introducing our very, very familiar friend, which is the moving average. Okay, and I'm on daily time frame. If you're on 1 hour time frame, it will be very, very different. Okay, so this is a daily time frame. I trade. I'm a swing trader, so I stick to the daily time frame because everything seems pretty calm and easy to trade there. But my entry is always on the 2 hour time frame and the 1 hour time frame, just so you know. So right here, my plan on DXY is still to look for what a possible pullback. Okay, if I get this pullback, possibly USD as I was explaining earlier, will also pull back to the upside. Then I will take a shot. Okay, I will also take a shot. All right, on USD as it's happening on what? On dollar index. That's my plan. And as at that time, when this pullback is happening, I'm very sure moving average would have what? Would have crossed over, which is the 200 period moving average. The 100 period moving average would have crossed below 200 and 50 would have crossed below the both of them as it was done right here. Okay, once this happened, I will possibly join the trade. But right now, none of them has happened yet. As a matter of fact, it's only just 50 and 100 that seems to be tilting towards each other to cross over each other. If that happened, that's the first signal. It's the second happen whereby the 50 crossed below 200, which now causes what we call dead cross. Okay, and that would be what? That would be very interesting for me to go to take. That would be very interesting for me. That would be a very good signal for me to start planning to short DXY. But anything outside of that, I'll still be very careful. Don't forget, we have another confluence right here, which is 50% Fibonacci, which is really good. So 50% Fibonacci also got triggered, and I get my the crossover also. That's multiple confluence, considering the fact that this is a previous support, so it's now be used as resistance. That's the third confluence. You see where I'm going with this, and then you can now see probably a weaker retail sales number for United States dollar, and then probably the PMI, the service PMI, manufacturing PMI, every other data that are coming this week, possibly gonna, if they don't favor dollar, then that would possibly signal a short opportunity. But none of these have happened yet, so I'm still very, very calm, and I will look into this as time goes on. But for now, I'm still very chilled on this one. So before I move forward, let's discuss the fundamentals that we have coming this week. I almost forget that. So right here we have on Monday we have just core retail sales, and Empire State Manufacturing Index in the United States. And all of these were forecasted to be very bullish for dollar, which will be really good for the analysis I just did on DXY right now. If all of this come quite bullish, you can see the previous was a negative 0.4 for core retail sales and negative 0.9% for retail sales month on month. And then the forecast was 0.6% and 0.3% respectively for both data. If all of this comes just as expected or even higher, that would be very good for dollar and we might see a very big jump in the price of DXY. This would be something I would love to see. So the pullback can happen and we can now start looking for short opportunity. Possibly on Wednesday when FOMC, when the Fed, US Fed will be cutting rates. They are not even planning to cut rates at all. That's the funniest thing. We thought in December that they're going to be cutting rates in March, but newsflash, they're not going to be cutting anything. They're remaining stable on this, I guess, because of the sticky inflation. Definitely the Fed was expecting the inflation to start controlling itself to keep getting cooler and cooler, as it did in October, November, December last year. But right now, what we saw in January and February, it was sticky. It was a bit higher in January. It remained the same in February, and in March, which was released last week, came quite shorter than expected, like a bit cooler, which was not super cool. So I guess that's why the Fed is remaining, like, probably leaving the interest rate unchanged. But until we get the actual, we can't really say, because they might as well just change their mind tomorrow and Tuesday, and then they start cutting rate. Who knows? Okay, we've seen forecasts not actually being actual with the Fed sometimes, so they might surprise us. So let's just keep calm. But if they start cutting rates, they actually went ahead and cut 25 basis points or even 50 basis points, which I'm not certain about. If we went ahead and cut, that would be very, very crazy for dollar, and we're going to see some fireworks. So let's plan for that. On Tuesday, we have in Canada, we have the CPI month on month, the median CPI, the trimmed and the common CPI coming. It's all forecasted to come higher than expected, which is the inflation is expected to come higher. And considering the Chinese tariffs on Canada, United States tariffs on Canada, EU also seems to be cooking something up. I'm not sure about that. But if all of these guys are imposing tariff on Canada, definitely there will be higher inflation and things will get super expensive in Canada. So this is very well expected. But we should still wait to see how this goes. Okay, we are expecting something like this in the United States last week, but we got a cooler inflation. So maybe, just maybe, we never can tell. But most of these are even expected to, like the median CPI is expected to come just as expected. Okay, just as previous. It's expected to come 0.7%, which is exactly as previous. But the CPI month on month is expected to come quite higher, like 0.5%. The trim CPI is expected to come just a bit higher by 0.1%, considering the previous, which is 2.7. So overall, let's just wait to see how this goes, okay? But personally, if you're asking me, what do I think? I think we're going to get probably a higher inflation rate in Canada. But don't forget, this is subjective. This is just my guess, okay? I'm literally guessing right here, all right? I'm not sure what's going to happen. Now, we have, on Wednesday again, we have the Bank of Japan policy rate. This is something we have been expecting personally, all right? I was expecting a higher inflation interest rate expectation from Bank of Japan, but it seems they're also keeping it cool. They're not cutting just yet. I don't know. I'm not sure if they're going to cut or not, but this week is going to be very, very spiky for him. I'm not sure I'm ready for it, but I guess we see. Okay, we're going to see how it goes. But whatever happens, I'll be there. And on Wednesday, after all this has been said and done, I will come back. I will give you the updates. I will tell you how I'm feeling personally and how my trade are doing, and then we look at what else we can take moving forward, because we are traders. We have to keep going, right? So until then, I'm going to stop on Wednesday. Okay, so let's take a look at the technical part of today's session fully. So USD JP1 still seems quite bearish. You can see we have officially gotten a death cross right here, and this is the 100 period moving average crossing. 50 period moving average crossing below 100, and 200 period moving average also cross above 50, which now causes a death cross right here. So in my personal opinion, we've seen UJ actually break below this particular support successfully. Now he's using it as resistance. Is he going to cross above it and probably tap me out above here? I'm not sure. Okay, anything can happen. It's the market. It's the Forex market. Anything can happen. Anything you can imagine can happen. You can make so much money. At the same time, you can lose so much money. Okay, so there is endless profits and endless loss in this business on a single trade. That's why it is very different from betting. Because there is endless profits and there is endless loss. It is based on where you are positioned. Okay, so now for me to avoid endless loss, that's why I have my stop loss above here. Well, my endless profit is very active because I'm not using take profit. If it decides to continue to go down, it's endless, right? I will just keep following slow and steady. Or I have to call my stop loss. That's why my stop loss is right at the top here. My trade is back to break even. and I would like to see how this goes in the next couple of days. So let's watch together on USD Aussie yen also, I'm still holding this one. This one is a bit in a drawdown. Okay, this is a very crazy one. I really don't know where Aussie is gaining this strength from, but I love it for the fact that it's actually beating Euro Aussie. That's very fine for me. But at the end of the day, this Aussie yen is not really looking good. But anything above here, I'd rather just tap it out at maybe something below, on my small account, something below $12 or so to speak. So which I'll be fine with. But at the end of the day, I would love to see how this goes. Okay, I'm still very much very bearish on this one. You can see the moving average course right here. And since then, the market has stayed below the 50-period moving average on the daily time frame. So I would love to see how this goes in general. But when I wake up tomorrow morning and Joe has gotten above here and tap me out, I will still report it and share with you on Wednesday. So just sit tight and watch for updates. Kiwi yen on the other hand, also in the drawdown, everything Aussie, whatever happens to Aussie happens to Kiwi. They are neighboring countries, so they are kind of like have a very similar economic outlook and every single thing. They're also a very big business partner with, or let's say, trade partner with China. So whatever happens to Aussie, most likely is going to happen to Kiwi. However, my stop loss is slightly above here also on Kiwi yen. So we're going to see how that goes. It might tap me out in the morning. I'm not sure. I don't know, but I'd like to see how this goes. CAD yen is also, I think this one is still in profit. Yeah, definitely still in profit. Looks quite decent. The moving average crossover has happened a very long time ago right here because of this massive dump. So now it has broken below this particular structure right here. And it broke that right there. So now possibly it's going to pull back to retest this particular structure and make it use that resistance. I have two choices. I can close this trade and anticipate for the market to come right here and join a new short trade when you use this place as resistance successfully. Or I can just leave it, have it drag me all the way back up to break even, or maybe in a very small loss. Open a fresh new trade and anticipate for it to come down. This is a decision I have to make by myself, and whatever happens, I'll let you know Wednesday. So let's go. So if you want to join this trade, just wait for it to come all the way to the top here. That would be a much better area to look for a possible short. And that will simply even pull this Fibonacci. You make it come all the way to 50% Fibonacci right there. So it makes it a very much better setup. Okay, if you're looking for short opportunity. And don't forget, this is not a financial advice. Please don't forget that. Swiss yen on the other hand is also a very smooth one. I think it's in very tiny profit right now. And this one has really been a very tough nut to crack because it's been a very crazy one, annoying one to say the least. And why? Because it's the only one that is yet to break below this particular support. Okay, it's the only one. CAD yen has broken the support. Dollar yen has done that. Aussie yen, Kiwi yen has done that. Euro yen is also very crazy. I'm not even going to talk about that one. It's terrible. All right. So Sweden is the only one that seems to be staying above this particular structure right here. And there's nothing I can do. Best I can do is just make sure my stop loss is still tight above here and see if I can get a retest right here or join a new short and see if I can break it this time. If we can break it this time. And if not, and I got tapped out in loss, I guess that would be a fresh new interesting stuff. Okay. But whatever happened, I will do it on Wednesday as well. The WTI, I have a short trade on this one also. The plan is to see it. You can see all my trade right here as a very delicate. Last week I told you that I have a very delicate trade because they are all facing a very strong support. And once those supports are successfully broken, it's going to be fire up. Unfortunately, if the support failed to be broken and the resistance instead got broken to the upside right here, I guess my trade will be tapped out in loss and possibly I might take a counter trend and ride it to the top right here and then take a fresh new shots at the top there. I'm a trader. I'm not here to marry buyers. I'm here to look for possible entry, trade opportunities and execute. That's the plan. So let's keep this going. Although on the edge finder, as I've shared earlier, right here we have a short opportunity on oil. It's reading -5, so that's very good. So I'm still very much bearish on oil, considering the fact that Donald Trump is also a big fan of oil supply of oil right now, like the supply, and is trying to increase the domestic production of oil. Also calling on OPEC, Saudi Arabia to also cut the price for it. So I think we're going to get a lower price of oil the next couple of weeks. But I'm not sure if my stop loss is strong enough to withhold the pressure, because we can get a push to the upside, like I said earlier, before it start dropping down, or it might just start dropping down right now. Okay, but as the case may be, I have a stop loss right here. I can't have my stop loss at the top here. That would be very crazy. So whatever happens, fundamental is supporting this trade. Well, I'm not sure if the technical is strong enough, because I know there will be some people that will be trying to take advantage of the support level to write it up before it starts selling. All right. So I'm not sure if that's not the case, but whatever happens, I'll still update you. Euro Aussie, I'm still on my counter trend short. Let me take this to 4 hour time frame so you can see this very clearly. I'm still holding this counter trend trade on Euro Aussie, and you can see right here, I took a short trade right there, and right now it seems to be very good. The moment this actually break below here, I will start trading heavily, okay, heavily on Euro Aussie. But as far as I'm concerned right now, this trade looks really good. It's a counter trend trade. It's not something I do every time, but sometimes the market actually makes very good sense. It works like magic. And I'm actually forecasting. I'm waiting for it to come all the way down here to 50% Fibonacci retracement. You can see right here. Okay, let's take it back to what the daily time frame so you can see the Fibonacci very clearly there. Yeah, I think this is too much. Okay, too much. It's too extended. So right here you can see that we have the 50% Fibonacci right around here. Okay, so if it comes down here, I will start looking for buy opportunity. But is it gonna come down there? I'm actually not sure because on the 4 hour time frame we have a structure here that the market can use as area of support and start flying back to the upside. There's a possibility of that. But I would really love to see it come all the way down to 50% Fibonacci, probably even shy away or probably kiss this particular structure, which is previously used as resistance and use as support before it start bouncing back to the upside, which I would love to buy. But at the top here, I'm not sure if I'll be taking a buy there. All right, so for now, I'm still holding this short trade and I would like to see how it goes in general. All right. So that is that on that as far as Euro is concerned. Euro dollar on the other hand seems to be dropping down also, but I think there's a pressure right around there. Also considering that institutions are also kind of like very tough, still trying to buy Euro. I don't know why they have to do that, but it's the institution. But at the end of the day, I'm still holding the shorts, this counter trend trade. Okay, I would love to see it possibly come down here before going back up. I'm not gonna take this buy for sure. The only reason why I would take a buy is if I can see it come all, excuse me for that, if I can see it come all the way down here to 50% Fibonacci or probably to this zone right here. Considering the fact that this area at some point was used as what? As resistance. So if you come all the way back to this region right here and use it as what? As support, am I looking to buy Euro dollar there? Or anything outside of that, I'm just gonna keep holding this counter trend trade, which is more like a mean reversion kind of short trade, which I'm still very much believing for now until I'm proven wrong and the market come all the way to the top here. Probably I will open a new short there and cancel my stop because I know for sure that this crazy move is going to get pulled back. Might not be strong enough, might not come to 50%, but I think this area will possibly get after, which is going to fall at 38.6% as the case number. All right, but let's see how that goes on Euro dollar. I'm still watching this very closely, anyways. Palm Sweet, I told you I'm looking for buy opportunity, right? So, like I said, some of my guys share the signal with some of the guys and they took a buy. So I'm looking for it to come back down here so I can join the buy right there. Okay, possibly. I will love to see that because I want to close some of my position on the yen pairs. So I would love to see if I can add pound sweets to the mix. Okay, so that is that on that. USD card, I'm looking for short opportunity. Okay, no, excuse me, long opportunity. I don't really know what to do with one card right here. And I think I explained in the last video I recorded on, what was it again? Because card is quite weak, dollar is pretty weak. I don't know what to do, right? We might end up getting an elongated range right here. It'll be something that will range for maybe 2 months or 3 months until probably dollar got really stronger and or maybe card just get extremely weaker and dollar just kind of overpower it. I would like to see what happens. But right now, I will possibly just hold on to this very tightly and just watch it, but I'm not in this trade at all. Okay, silver on the other hand, you know what I'm expecting. I want to see a pullback. At least I want to see it come down to this region. Okay, or maybe I can ride it all the way to the top. Okay, I don't know why I missed out and I messed up right here. It's fine. Okay, all I'm looking for now is what to see a pullback and I can ride along it. Okay, and you can see right here on Edgefinder, I'm not seeing any silver. I'm not seeing a signal for silver right here among the top setup, which is quite weird. But I guess I would like to see how this goes in general. Okay. But right now, technically, I want to see this pullback first, then I'll take a buy on silver. What else? Let's talk about gold. The same thing on gold as well. I would like to see a pullback. Okay, I'm not sure if I will take gold. Anyways, I'm not sure because everything I've been shouting earlier back like 2 weeks ago and last week was I want to say pullback to this region before I take a buy, or possibly back here if I take a buy. So many people are very lucky to take this buy right here. Congratulations to them. But definitely it's not my kind of trade. Okay, I want to see a very solid pullback. Okay, 50% at least. Anything outside of that, I'm not interested. I'll prefer to miss a trade On the journey trade, I don't really believe it. And that is just how I go with trading, in my own opinion. All right. It's always the money your choice as far as I'm concerned. So you have to follow what you believe in. Okay, so right here I'm just gonna stick to silver and just let's go. So on that note, let's take a look at Bitcoin. Anything on BTC for right now? This seems to be it actually did a very nice and decent pullback during the weekend. But right now it seems like it's pulling back heavily. Like I said, this structure right here is still with the price strong. I would love to see it come back to 91%, possibly before it drops down to 71K or maybe break above it and start going up. But right now, I am still watching. Okay, and that's what I keep saying since last week. I'm still watching Bitcoin right now. Nothing for me on Bitcoin for now. All right. So that's that, guys. I will see you in the next one. Please don't forget to follow me on socials. I'm on TikTok. The links are always in my bio. So yeah, I'm on TikTok. I'm on LinkedIn. I'm on Facebook and IG. And then don't forget to subscribe to the YouTube channel as well. If you find the video useful to you, you can always drop a comment if you have anything you want to say. I'll see you in the next one. Have a good day. Bye for now.